This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are starting a new week. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Prashant Nair. With me, as always, my colleague Sonia, and Surbi is with us today as well. Good morning, guys.
Hi, good morning. All-time highs likely this week.
Today,
I don't know. I mean, you know, the market cues are
we were actually holding on for the two of you on Friday. We were almost there, 50 points, and we said, Nigel, Manglam and I, no, let's wait. Let's wait for Prashant and Sonia to get back, and then maybe we'll go ahead and scale that peak.
Actually,
nice of you guys.
It's a good time. It's a good time to be, you know, in the studio, right, when you hit all-time highs. So thanks for that.
Well, green is the color, right, Sonia?
Yeah.
It looks like it. I mean, let's just take you through what you need to know in terms of cues, right? So we'll just start with that basic kind of, tidbit, which is that we're just about 61 points away from all-time highs. The all-time high is 18,887.60. I'm mentioning that decimal place because, I mean, on the Bank Nifty, you got to within 10 paisa. I didn't quite make it, but eventually you did. So, just 61 points away. On Friday, I mean, if you're looking for global support, that wasn't there. The Nasdaq ended about 0.75% lower. You had the US 10-year yield, which was up about 5 basis points or so. I mean, both are negatively correlated. Yields go up. Tech stocks, typically, historically speaking, have been under pressure. US markets, by the way, are out on a holiday today. So there's no action which you should expect from later in the day because US is not going to be trading. Just one thing I want to mention about the U.S., that over the next 1 month, according to many estimates, this is in the U.S., we will see one of the largest liquidity shocks, ever. Monthly liquidity shocks ever. This is largely because the debt ceiling is no longer an issue, and the Treasury in the U.S. will need to rebuild its reserves. It's a technical thing, but over the next month, this will play out. More on this later, but I just wanted to put this up before we go any further. Now, let's just come to the market here. On Friday, the Nifty held the low, which it made on Thursday. Remember, last Thursday, we had a bit of a correction, and that sparked fears that maybe this is getting a little overdone. But Friday, we were right back. We held Thursday's low of 18,669 and made one more high on Friday. This is important. Now, the Nifty must stay above this level, which is 18,669, for the higher top, higher bottom formation to hold. So very near term, that is the level to watch out for. And of course, on the upside, it is 18,887, 18,888, which is the all-time high. Now, the Nifty Bank also bounced from its 40-day exponential moving average and got to 61.8% retracement of the recent fall. When I say recent fall, from 44,500 to the lows that we had last Thursday. So we got to within 61.8% retracement with Friday's rally. This is supportive. Bank Nifty has support at its 40-day exponential moving average, which is 43,443. The resistance now comes in at 44,500, 44,499. It's a level we put out for the last many weeks, but of course without a success. The Nifty Bank has been kind of twiddling its thumbs, not really giving a big decisive breakout or a breakdown. Now, mid-caps and small caps had another fantastic week. Both indices were up about 3% Friday to Friday. I just want to put this up, just a data point to not ponder over, but be mindful of. The relative strength index, which is a simple but very effective way of looking whether the market is getting into very overbought or very oversold territory, is now flashing, I would say, amber to red. So the Nifty mid-cap RSI is at 86. The small-cap RSI is at 84. Anything over 70 tends to be read as overbought. We are at 86 and 84. So it's entirely possible that over the next couple of weeks or so, we see a little bit of a pullback. And it would be absolutely acceptable. It would be absolutely healthy as well. This also, by the way, tells you that it's overbought. It also tells you that the market is in very strong hands. So, a pullback and then an up move, perhaps I think is it would be ideal. I mean, I would even go ahead to say that it would be ideal if that were to pan out, an orderly kind of a pullback and then, a move higher once again. So keep this in mind. And of course, I'll end with the little bit of the monsoon progress, which seems to be stalling a little bit. I mean, we had a little bit of rain, but largely that monsoon, cyclone-related, but no monsoons in Maharashtra yet. And by all accounts, that has already been delayed. That's a very important data point that you need to be mindful of over the next 1.5 months or so. Sonia.
Oh, absolutely. I mean, all the earnings of the rural companies are, linked to how the monsoon is going to behave. So that is, the big trigger for sure. But I think we're just quibbling with a few points here and there. We are like virtually at all-time highs. Yeah. So, the uptrend in the market is intact, and that is the moot point at the moment. All-time highs are likely either today or in the course of this week. But the big story has been that the buy on dips trend is something that continues. In fact, if you look at it, both foreign and domestic investors bought in the cash markets on Friday. FIs bought about 800 crores, DIs bought almost 700 crores. And if you look at it put together now, in just 4 trading sessions, we've seen buying of 7,300 crores from the foreign investors. So the money is coming in thick and fast, and hence the kind of outperformance that the Indian markets have seen. A lot of the macro data is also positive. We were earlier talking about, the PMI numbers, the GST collections, the inflation cooling off. The latest to add to that is that the direct tax collections have also picked up quite a bit. In FY24 so far, it's an 11.5% up move that we've seen in India's direct tax collections. So that is another, feather in the cap for the Indian markets, that is. As we begin trade today, there are some weak global cues. The US markets are not trading tonight, but overnight on Friday, you had a little bit of a cool off, 100-point lower on the Dow. The S&P 500 broke its 6-day winning streak. But give and take everything, it's been 5 weeks of a rally for the S&P 500. So as Prashant was saying, some cool off perhaps could be the need of the hour. But the buy on dips continues. European markets closed higher. A lot of the traders were digesting the ECB rate hike. But nevertheless, a good gain of almost 1.5% across the European markets. But let's see. It's a long week ahead, and the bulls definitely have tightened their grip on the market. So I guess it's just a matter of time before the party continues.
Oh, absolutely. And the kind of momentum that we saw on Friday, folks, I just want to point out, it was not a market that was led by 2 or 3 stocks higher. It was across the board. Every sector, barring IT, because of that news that we had from TCS, barring that, everything was firing on all cylinders within the large cap space, within mid caps. So there was very serious momentum, broad-based momentum in the market. Let's see if we get a follow-up of that kind of strength that we saw last week on Friday in particular, or whether today is going to be a bit of a more cautious day, given the fact that global cues are not raging away, if I could say. They're a little more measured. I'll just add geopolitics to the mix for in terms of the cues that we'll watch out for. Interesting action lined up today. This is the first time after that whole spy balloon incident between the US and China that we have the US Secretary of State in China, in Beijing, to meet a couple of the top leaders, including the foreign minister. So that's going to be interesting. From our perspective, it will be far more important, of course, to look out for all the headlines and the announcements around PM Modi's visit to the US, which kicks off on the 21st of June, so this week itself. Defense stocks have been on a tear, and everyone's talking about that tie-up with respect to engines with GE. So we'll watch out for more headlines, drones, etc. So this will be an interesting area that I'll look out for sure. Just want to add that in terms of the monsoon scare that Prashant alluded to, we are already down about 30 to 35%, the deficit for the month of June, because monsoons have been really pushed back. And there are some concerns already on Kharif sowing. It should have already started by now. You have rice, paddy, oilseeds, pulses, all of those crops. Sowing hasn't begun. The ground is not ready. So some of that concern perhaps will temper the enthusiasm a little bit. But we're hoping that monsoons revive now that the cyclone is behind without, touch wood, any major disruption to life or to property. And we're hoping that maybe we will see a revival. In fact, you'll hear more from the Met as we go along on the show. So lots lined up, some sense of caution, but I guess we're starting off with a very optimistic frame of mind.
All right, and absolutely. We are, before we go any further, let's quickly tell you what's lined up in the first half hour of the show today. We'll get you updates from markets across the globe. Dean Kim of William O'Neill will join in to discuss the global trade setup. Our research team gets you the top 10 stocks to watch out for the day. At about 8:30 this morning, we'll have our market expert, Prakash Devan, joining in to weigh in on specific stocks and, of course, the cues that he deems important.
All right, well, let's begin the day with some opinion coming through. First up on the equity side, we have Chetan Seth of Nomura, who says that they are tactically positive on Asian stocks as the AI theme, still resilient US economy, and China's stimulus hopes will likely support Asian stocks. He says, however, in the medium term, they are concerned about the US slowdown and recession risks, but the timing is uncertain for us. He says the timing of the weakening in the US labor market and consumption will matter for stocks, as this is when the market will likely view it as a confirmation of a US recession. He notes that all past 12 recessions since the World War II have seen stocks weaken into or during the recession, including the mild recessions that have taken place in the past. So a bit concerned about the US slowdown.
Okay, so that's a call coming in on the equities. By the way, folks, I didn't mention in the Paris Air Show, we might just see Indigo top Air India's order. Air India hit the headlines with a 470 aircraft order. The expectations are this week, Indigo will go ahead and order 500 planes. So that's another big one to watch out for. And let's see if the stock has any action around that. Actually, plenty of stock-specific action to talk about today as well. So in our special Top 10 segment, we will be covering the likes of Dr. Reddy's Laboratories, Hindustan Aeronautics, L&T, GUFIC Biosciences, Manappuram Finance, RPG Life Sciences, Gateway Distriparks, Axis Cades, and ONGC. These are stocks on the back of positive news flow. Havells is the one that's on the red, likely to be on the red, on the back of some negative news flow. So we'll tell you more about this in just a bit.